Cathie Wood has one big prediction for Bitcoin, a $3.8 million price target for the leading cryptocurrency, boosted by institutional ETF investments.
Our bull case for Bitcoin was 1.5 million, and many people just summarized it as north of $1 million. If institutional investors were to allocate a little more than 5% of their portfolios to Bitcoin, as we think they will over time, that alone would add $2.3 million to the projection I just gave you.
Wood did not specify in her comments what timeframe she expects Bitcoin to hit this per-coin valuation. She previously projected Bitcoin would hit $1.5 million by 2030. Her latest price target implies a more than 5,000% climb in the value of Bitcoin compared with March 2024 levels. In 2023, Bitcoin's price skyrocketed by more than 150%, reaching more than $820 billion in market cap. This new projection equates to an eventual market cap of roughly $80 trillion for Bitcoin. The catalyst behind this rosy prediction: the rise of institution-supported Bitcoin ETFs. The financial world is still adjusting to January's SEC approval of Bitcoin ETFs. And for those inside the cryptoverse, reaction has been nothing but positive.
Investors are resoundingly choosing IBIT for Bitcoin access, whether that's new investors to the space who weren't willing to do it when it had the frictions that for some Bitcoin direct investing incurred, or investors who are already in the space but are choosing this as a more efficient, lower cost, more accessible, convenient exposure solution.
That's Robert Mitchnick, head of digital assets at BlackRock. Longtime Bitcoin bulls see the rise of institutional Bitcoin ETFs as an indication that Bitcoin has reached its tipping point.
I think you're now kind of transitioning into this more mature kind of regime for the asset class moving forward now that we have the ETFs. So now you have all these pension funds, sovereign wealth funds, etc., that can actually look at this thing seriously and allocate and feel comfortable doing so.
A good number of institutional investors, however, are still on the sidelines for now. PE investors and fund managers consider the asset class too novel or risky to consider for investment. Here's what growth fund manager Dan Tapiero had to say.
Certainly the institutional investors that I speak with for our funds, most have almost no allocation to anything in crypto, blockchain, Web3, digital assets, however you want to call it. So, we have a handful of very forward-thinking institutional investors in the fund of this, but generally of the people that I speak with, there really aren't, there isn't an overwhelming acceptance. However, it's beginning to change just a little bit now with the ETF.
And while banks and financial institutions are just beginning to pile into Bitcoin with their own ETFs, funds are looking to distinguish themselves from the competition, including offering low fees and putting house money on their own bets.
Where we are trying to differentiate is through our skin in the game. So VanEck made the largest seed investment into our product by a factor of 3, $72 million of our own money. So we're going to be right alongside our clients. We always eat our own cooking.
The big question: whether that institutional interest will support Cathie Wood's lofty prediction of $3.8 million per Bitcoin. For Investors Business Daily, this is Mike Zhuang.